Hello everyone, welcome back to my YouTube channel. In the last class, we learned about how to ascertain profit or loss under conversion method using incomplete records of information, right? So what is the meaning of conversion method? Here we convert incomplete records into complete records by preparing trading account, profit and loss account and balance sheet. So what are the steps involved in conversion method? First we need to prepare the opening statement of affairs. After that we need to prepare missing accounts like debtors account, creditors account, and if required only then we need to prepare bills receivables and bills payable account and cash account, right? And after that we need to prepare the trading account, right? So after trading and profit and loss account, we need to prepare the balance sheet to determine the financial position of the business. Clear? These are the steps involved in conversion method. So today we are going to solve one practical problem under conversion method. So let's start it. See here, Mr. Kumar keeps incomplete records. From the following information, prepare total debtors account, total creditors account, trading and profit and loss account and balance sheet. Means here in this problem we need not to prepare bills receivables or bills payable or cash account. Right? Here they mentioned only prepare debtors account, creditors account, trading and profit and loss account and balance sheet. Right? So let's see the details. Opening balances as on 1/4/23, cash rupees 10,000, debtors rupees 30,000, creditors rupees 20,000, stock 25,000, furniture rupees 15,000. These all are opening balances. Now closing balances are as on 31st/3/24, cash rupees 14,000, debtors rupees 35,000, creditors rupees 22,000 and stock that is rupees 28,000. So these information helpful while preparing the debtors account, creditors account and opening statement of affairs, right, and balance sheet, right? Now next one, during the year cash received from debtors rupees 1 lakh. Cash received from debtors means we need to enter it on the credit side of the debtors account. Cash received, right? And next one, bills receivables received, that is rupees 12,000. Bills receivables received means when debtors gives the bill, means that is also we need to enter on the credit side, right? Debit account decreases. Next one, bills receivables dishonored. Bills receivables dishonored. It means what? Bills receivables dishonored. It means the bills when the customer gives the bills receivable but later the bill is not paid. Means that one we need to enter on the debit side. Means customers they have not paid the amount, right? And bad debts. Bad debts means the amount that is not recoverable from the customers. And discount allowed to the customers. Discount allowed to the customers. That is also on the credit side of the debtors account. Means customers pays less amount, right? And returns inward. It means sales return. Don't get confused here. Return inwards means sales return. That is rupees 3,000. Means goods returned by the customers. Goods returned by the customers. That is also we need to record on the credit side of debtors account. And cash paid to creditors. Now this one we need to mention in the creditors account. Cash paid means on the debit side of the creditors account. Bills payable accepted. Bills payable accepted means the business that is accepted or promised to pay the amount, that is comes under debit side of the creditors account. Discount received, that is rupees 2,000. Discount received means suppliers gives the discount. In creditors account, discount received, suppliers gives the account, means we pay the less amount, means liability reduces, that is recorded on the debit side. Debtors account and creditors account exactly opposite, right? And return outwards means purchase returns. Purchase returns. Return outward means goods returned to supplier. Means amount payable reduces on the debit side of the creditors account. And cash sales. Cash sales, that one we need to enter in the trading account. And expenses paid, it comes under profit and loss account. Drawings, this one we need to deduct from the capital, that is rupees 6,000. Clear? In the balance sheet, we need to deduct it from the capital. So these are the information available in Mr. Kumar's account. So before solving this problem, you have to watch my previous 2 classes. In that I have explained clearly about debtors account, creditors account, and bills receivable and bills payable. So in this problem, bills receivables and bills payable account, that is not required. Clear? So first watch that classes and proceed with this one. Clear? Now let's solve the problem. First what we have to do, first step is prepare the statement of affairs as on April 1st 23. April 1st 23. So what is the formula? See here. Statement of affairs to determine the opening capital. So the formula is assets minus liabilities. Opening statement of affairs, we have to enter the opening amount. Opening amounts. So see the problem here, opening amounts are there, right? Liabilities, assets. So furniture 15,000, debtors 30, see here, debtors 30,000, cash 10,000, stock 25,000 on the asset side. And on the liability side, creditors, that is rupees 20,000. Creditors 20,000. Now credit side is more than debit side, right? So asset side, that is more than liability side, means assets minus liabilities. Assets equals to rupees 80,000, and here you need to deduct the liability side, that is rupees 20,000, creditors. So capital at the beginning, that is our balancing figure. How much? That is rupees 60,000. 60,000, this is our capital at the beginning. Clear? So step first is over. Now second step is we need to prepare the missing accounts. So here missing accounts are debtors account and creditors account. So if we prepare the debtors account, we are able to find out credit sales. And if we prepare the creditors account, we are able to figure out credit purchases. First, let's prepare total debtors account. So this is the format of debtors account. So first in that, what we have to write down? To balance brought down. To balance brought down means these are the customers who already owe money to the business. Amount receivable from the customers at the beginning of the year. Clear? Debtors account, we have to start with to balance brought down, and creditors account by balance brought down. Clear? So to balance brought down, how much debtors account opening balances? That is rupees 30,000. So write down rupees 30,000. Clear? Now let's see the other details. Cash received from the customers. Cash received from the customers. When customers pays cash, debtors reduces. Means we need to enter on the credit side. How much? That is rupees 1 lakh. Clear? Now bills receivables received, that is rupees 12,000. Bills receivable received means when debtor gives bill, debit account decreases, that is rupees 12,000. Next one, bills receivables dishonored, that is rupees 2,000. bills receivables rupees 2000. It means what? That is, we need to enter on the debit side of the debtors account 2 bills receivables, bills dishonored. Means the customer gives the bills receivable, but later the bill is not paid. Right? So that is what? Rupees 2000. Now after that, bills cash received over, bills receivable over, bills receivables dishonored, bad debts means amount that is not recoverable from the customers, that is rupees 1500 on the credit side. And bad debts, discount allowed to the customers. Customers pays then less amount. Means debtor reduces. Means write down on the credit side, that is rupees 2500. Okay, if debtors reduces, you have to enter the amount on the credit side. If debtor increases, means see bills receivables, means they are not paid the amount, means increases, debtors increases, go to the debit side and enter the amount. Discount, that is given to the customers, they pay the less amount, debtors decreases, so write down on the credit side. Like that, in the creditors account, just exactly the opposite. Clear? Now next one, discount allowed over, return inwards means sales returns, that is on the debtors account on the credit side. Return, it means what? Goods returned by the customers. Means debtors reduces, right? How much? That is rupees 3000. So next after that, by balance carried on, how much? That is rupees 35,000. Write down 35,000. Now you need to total the credit side, that is equals to rupees 1,54,000. Credit side is more than debit side. Now deduct 30,000 and 2,000. So 1,54,000 minus 30,000 minus 2,000. Then we will arrive credit sales, that is rupees 1,22,000. That is our balancing figure. Credit sales, it means what? It means selling goods to the customers without receiving cash immediately, payment that is received at a later date. So if you prepare the debtors account, we are able to find out credit sales, that is rupees 1,22,000. Clear? Till here it is clear, right? Now next we need to prepare the creditors account. So creditors account, here by balance brought down. How much creditors? Rupees 20,000. Amount payable at the beginning of the year. Clear? After that, next one, see here, cash paid to the creditors, that is rupees 80,000. Cash paid to the suppliers means liability reduces. What I said, if the debtors that reduces, we need to enter on the credit side in the debtors account. But creditors account is exactly the opposite. If liability reduces, we have to enter on the debit side. Here in debtors credit side and creditors account debit side. That is to cash paid. How much? That is rupees 80,000. And next one, this is over. Next one, bills payable accepted. Means when we accept the bill in favor of the creditor. Means we promises to pay the amount, that is how much? Rupees 10,000. Means liability reduces. Go to the debit side and write down to bills payable, bills accepted, that is rupees 10,000. Clear? Now discount received means discount given by whom? To the supplier, given the discount to the business, means liability amount reduces, right? That is rupees 2,000. See, discount received how much? Rupees 2,000. And return outwards, that is rupees 2,500. Purchase return means business that returns the goods to the suppliers, that is rupees 2,500. Means this much of amount liability reduces, that is rupees 2,500. And here by balance brought down, here write down to balance carried on. How much? Discount received done, right? This is also done. How much creditors? That is rupees 22,000. So to balance carried on, rupees 22,000. Now debit side is more than credit side. So total of debit side 1,16,500. From that deduct rupees 20,000. Then we will arrive credit purchases. That is our balancing figure. The amount is rupees 96,500. That is our credit purchases. Clear? So I hope this is clear to you all. Now what is the next step? First we prepared the statement of affairs as on April 1st 23 to find out the capital at the beginning. After that we prepared the missing accounts, that is debtors account and creditors account. Now next step is we need to prepare the trading account. Clear? So in the last classes I have explained the format of trading account. If you have any doubts in the trading account, please watch that classes first. Clear? So first in trading account what will come? To opening stock. How much? To opening stock, that is rupees 25,000. Write down. Next to purchases. In that cash purchase will also come and credit purchase will also come. So what is our cash purchase? See here, cash purchase rupees 18,000. Write down 18,000. Now credit purchase. Now credit purchase, that is rupees 96,500. Here we have find out the amount. In credit, if we prepare the creditors account, we are able to find out credit purchases, that is rupees 96,500. Clear? 96,500. Total of these 1,14,500. Now there is one return outward, means purchase return. How much? That is rupees 2,500. Right? So deduct 2,500. Then we will get 1,12,000. That is our total purchases. And after that go to the credit side and write down buy sales. Here also we need to enter cash sales and credit sales. Cash sales, how much? See here, cash sales, that is rupees 30,000. So cash purchase is over, right? Cash sales, that is rupees 30,000. Credit sales, how much? Here we have prepared the debtors account and find out credit sales, that is rupees 1,22,000. So write down credit sales rupees 1,22,000. So total is 1,52,000. And there is one return inwards. Return inwards, how much? That is rupees 3,000. Sales return. So deduct 3,000, then we will get 1,49,000. Now by closing stock, how much? That is rupees 28,000. So write down closing stock. Now gross profit or gross loss. Here there is gross profit. Credit side is more, that is rupees 1,77,000. So deduct 25,000 and 1,12,000. Then we will get gross profit of rupees 40,000. If now trading account is over. Now next here profit and loss account will come. Now we have to brought down gross profit. See, by gross profit brought down. How much? That is rupees 40,000. Now on the debit side we need to write down the expenses. Here bad debts, that is amount not recoverable from the customers, that is rupees 1,500. Right? And after that expenses, two expenses. See, 12,000. Two expenses, that is rupees 12,000. Write down. And discount allowed. Discount allowed. How much? That is rupees 2,500. Discount allowed to the customers. Then we will receive the less amount. That is our expense, right? So discount allowed, how much? 2,500. At the same same time there is discount received also. Discount received means suppliers provide the discount to the business. How much? That is rupees 2,000. Means this is the income. So we can pay the less amount to the suppliers if they provide the discount to us, right? That is rupees 2,000. Now totally. Here again credit side is more, 42,000. From that you need to deduct bad debts, expenses, discount allowed. Then we will get net profit of rupees 26,000. Clear? Now we prepared the statement of affairs as on the to determine the capital at the beginning. After that we prepared the missing accounts. After that we have prepared the trading and profit and loss account. And lastly we need to prepare the balance sheet. Balance sheet as it March 31st 2024. So asset side. Here furniture, there is no any depreciation they have provided, that is not any information is not given in the problem, right? Direct write down furniture 15,000, fixed assets, debtors how much, that is you have to see the closing balances, be very careful, that is rupees 35,000, and stock 28,000, cash 14,000, and bills receivable. Bills receivable, you should be very careful in this, right? So bills receivable, how much? Bills receivables received how much? 12,000. But out of 12,000, dishonored means the amount not paid how much? That is rupees 2,000. So you need to deduct 12,000 minus 2,000, that is rupees 10,000. Clear? Now capital at the beginning 60,000. In the step 1 we have calculated the capital at the beginning, right? That is rupees 60,000. So write down capital 60,000. For that you need to add the net profit. How much? That is rupees 26,000. So add 26,000. So total 86,000. And from that we need to deduct the drawings. That is rupees 6,000. See here. Drawings rupees 6,000. So total capital, that is rupees 80,000. After that creditors how much? Sorry, this is the opening balance. Creditors 22,000. 22,000. Clear? So this is the balance sheet. Asset and liability side should be equal. Here also if we total the asset side 1,02,000 will come. If we total liability side 1,02,000 will come. Means our problem is right. Clear? So in this way we need to ascertain the profit or loss under conversion method. Clear? So I hope this problem is clear to you all. If you have any doubts in this problem, please leave a comment. Thank you.